Hello, folks. Good evening. This is Sanjay Mehta coming live at 100x live session with Sashi Reddi, SRI Capital. Uh, we have been seeing across Indian SaaS companies have great potential to acquire customers around the globe, and SME market for SaaS is growing rapidly, and it is poised to be a $50 billion market by a report. Sashi Reddi, who is the founder and managing partner at SRI Capital, an early stage fund based out of Philadelphia, will help us understand, how the deep tech startup in US and India can work across. So SRI Capital invests in SaaS companies, deep tech companies, and he will speak today with us on how to build B2C to B2B startups and share his wisdom on investing in early stage startups. Indian startups, I believe, has got an edge in terms of mobility and becoming a key requirement for SMB and SaaS. So let's hear Sashi Reddi speak on his portfolio success, experience working with early stage startups, founder in area of deep tech and SaaS. Capital has a portfolio of 40 startups through various entities. And let me just welcome Sashi. And Sashi, if you can help me with your opening remarks on current crisis and what you are looking around in the venture capital world in this COVID crisis.
Absolutely, Sanjay. So thank you first for having me. It's a real pleasure to be here, and I really appreciate really what you're doing for the startup community. Having these sessions, I think it's a good time for startups to hear from all various people, and I'm sure it's a big impact when the COVID crisis hit. Of course, we are all in total shock, and hopefully now we're slowly starting to come out of that shock. I know that next 4 to 6 weeks are going to be tough for all of you are like friends in India, but I'm sure this will come to pass. So I would just say like a couple of things about the COVID crisis, right? So I think in the short term, as a startup, it's going to look really bleak because most startups, of course, just have enough cash to barely survive. So suddenly with this kind of a situation, you're suddenly like, what do I do? And all of that. But it's hard to see it now, but I think once the worst of the crisis is over and we look back on this time, I think we'll find that, these types of disruptions, whether it's like due to COVID or due to a world war or due to depression or whatever be the case, that is really the best time for startups, because that's the time when startups can actually get a significant leap forward over established companies. That's the only time you can really do it. So I think just like any other, a massive, sort of like a disruption, I think you will find that startups are going to find a way forward, and we'll see when we get to end of 2021, we're going to look back and say, hey, where did all these startup leaders come from? Well, they all came from, something that happened during this crisis. So I think that's what we're going to see. And I think, one of the things I would be like a bit concerned about the short-term impact is that the consumption levels in India are going to go down. And I'm sure that you see that, Sanjay, in your portfolio as well. So I think B2C companies that are focused, that depend on Indian consumption, I think are going to have to sort of struggle for the next 12 to 18 months. But that said, I think for the enterprise software business, I think this could be like a pretty unique opportunity for these companies. And, we can get into that. But I would say broadly, those are my views on the COVID.
Sure. I think that's a good positive note from Sashi. We are all going to emerge out stronger out of this crisis and look back in a positive way. Sashi, let's get into the topic of B2B to B2C startups. What are your views on Indian startup? What do you see the future in this space, and how do you build it?
Yeah, so like I really hate acronyms, but I just figured that if we put one large acronym like B2C to B2B out there, just as a way to capture like my views on how to build an enterprise SaaS company. Sure. I've been investing in enterprise software now for 7 or 8 years, writing the first check in probably about like 2 dozen like tech companies, and there's been like a big learning over the years. When I saw the news about like Postman, the big raise, $2 billion valuation, I was so excited because, every time people ask me about, okay, what are the big success stories coming out of India? Now, why do you really believe in this? Why are you putting all your time and energy into this stuff, right? And we only had like a fresh desk to go back to as the common name. We keep pointing at the same company for the last 5 years, and it gets a bit tiring. So I'm so happy to see that now we've got Postman coming out. Of course, earlier we had Druva also being successful. So we've got like 2-3 examples now. So I'm really happy about that. But I think that there's a way forward from here that doesn't depend upon one company every 2-3 years coming out. I think we can do much better in SaaS. And like I've been thinking about what have I learned over the last few years, and what do I think needs to change in our thinking? And here's where I came out. And of course, this still has to be proven out. But I believe that, one of the things that we've done, which actually I've done, and I'm sure like some of my peers who are VCs have done this, is that we've always told enterprise SaaS companies, you know what, start in India because it's cheap. You can make a lot of mistakes, you can figure things out, and then you'll still be forgiven. And when you get your model right, then let's spend the big money and we'll go to the US. Sure. And that has been the accepted like wisdom for years, right? We've all done this, start in India, then we'll figure things out. When we have money, we'll go to the US.
Sure.
But I think that's exactly the reason why we have a problem, in my opinion. Because what happens is that, how do you do SaaS in India, right? The entire economics of SaaS is based on the fact that everything is like really touchless, and you just get your like payments every month into your bank account, and it's a very profitable model. But it doesn't work like that in India, right? Because what happens is that even if you have to sell a small ticket item, like small ticket MRR, right? Even say it's like 50,000 a month, the sales guy has to make 3 or 4 visits to meet with the customer. It could be at the C level, it could be like a manager, but you have like multiple meetings for the sale to happen. Then you have multiple meetings to train people, though it's supposed to be something that people can just do on their own. It's still, they would call someone to come and train my staff for a day or 2 on the software, which they should be doing on their own. And then if it's any like support, they expect you to come to the office fixed, though it can all be fixed like really remotely. They still expect like face-to-face visit. And then, of course, finally the payment side, right? I mean, I found it very sad that we actually have to send people to collect the money again. So when you have the SaaS model that has so much of this friction in the system, how can Indian SaaS succeed? So fortunately, due to COVID, I don't think people are going to expect much of the face-to-face interactions. I think that's a big help to like Indian SaaS, because now I think a lot of the stuff can happen without that expensive flight and expensive meeting and all those things. We can do all of the sales over Zoom, and that's the way it should work. But what this has done, this whole approach of India first type of model, is that because we expect this face-to-face interaction, what have we done as startups? We've really compromised on the user experience in the way that we design the software. We support the software. Is it easy to use? Everything. We just assume that, why bother with it? Anyway, I have to go and like train the guy in his office anyway. So why bother making it totally self-service, intuitive, superb experience? So this India first thing has actually, in my opinion, set us back, because we don't have the kind of interface and UX and experience that will help us win in the US.
Sure.
So my view is that why don't we see that's the problem and shift the model to saying that let us do US first, or whatever first, but outside India, because India is making us take too many compromises on the interface. So if you did this US first, how would that work, right? So I think I've just put together I just wrote an article on like a post on LinkedIn on this topic, and I'm just calling this whole approach B2C to B2B. And what that really means, in spite of this long acronym, is that I know you're building enterprise SaaS. I know you're doing B2B, but think of it almost as if you're doing B2C. Come with that mindset, where the first thing is that it has to be a phenomenal user experience.
Mm-hmm.
I think there can be no compromise. So just like, if you were to go to like a Swiggy or something to order, you expect that to be intuitive and easy to do. Otherwise, you would not order it, right? So I think put that same logic into your B2B software. It's got to be that intuitive. And The second item I would think of is the pricing. Because of the fact that in India we're used to knowing that whatever price you put, they're going to chop you down by 60 or 70%. You don't want to put your pricing publicly, and you do all these things so that you can then go to the person's office and try to negotiate. Now that we're saying US first, just be very transparent about your pricing and keep it simple, not like 18 layers, but just 2 or 3 layers, like a standard freemium type of model.
Sure.
So that's one aspect of it. The other item of this strategy is about being completely self-service, meaning that you should not expect anyone to need any support. They should be able to just go online, sign up. And I know that some of the software is actually fairly complex that you might be building for enterprise SaaS, but there's got to be like a subset of it that should be possible to be self-service. So I think you have to sort of work that into how you do this stuff. I think like a couple of other things I would just add would be if you're looking at this as something that is self-service with clear pricing, why do you need a sales guy? See, the whole thing about going to the US is that, the sales is very expensive, which is true, of course. You hire 2-3 sales guys, you need like $1 million spent, right? So, but now that you're going for this model of self-service with a beautiful UX, why do you need a sales guy? It's got to be driven by your marketing. And our teams in India are very savvy with SEO and all those things. So we can do this entire sales sitting in India entirely like marketing driven. And once you get to the point where some company where like 3-4 different groups have tried out your software and they like it and they want to go to their like the CIO to get the spend approved for like an enterprise-wide license, at that time you might have a sales guy on the ground to actually close the big deals. But otherwise, a large part of the launch can be done through your marketing-driven stuff. So all of these are the kinds of things that I think we can do now, because if you take this mindset of US first, you can do all of this stuff without spending too much money. It may not cost you too much more than if you're like selling first in India, as we thought before. But I think this is...
Sashi, you got first question coming for you.
Yeah.
From Naveen Hemani is asking, is there any scope for customer analytics SaaS products for SMBs? Do you see an opportunity over there?
I think it's a fantastic opportunity. Absolutely. So I would say that if you think of like analytics, right, it can be like really broad. So I guess we have to like figure out what. So here's the other thing that I would say about SaaS if you're going to succeed in the US. So like too often we take on a problem that's too big, but it's been solved 5 or 10 years ago. So anything broadly like CRM focused, those types of things, I think that story has been done many years back. So the SaaS companies that we personally like are things that are very niche focused. So they might be only 200,000-300,000 users in all of the US that need that thing. But it's like a highly specialized SaaS that solves a problem that is so critical to that population of 200 or like 300,000 people. And they might be willing to pay you $500 a month. So it actually can be like a pretty large market that you can go after, but highly specialized. So I would say that, so to go back to this thing about like analytics, right? Of course, it's a fantastic space. There's a lot of opportunity in analytics, especially for SMBs, which are highly underserved, right? So they want something simple that they can pay for like 20 to like say $50 a month to get some, report to the dashboard. So then I would say, what analytics do you want to go after? Whether it is the spend of the SMBs, so some sort of thing there, or is it tracking employee productivity? It's got to be something that is so well-defined point solution to start with, from which you can expand after that.
So basically, idea is to go for a point solution rather than a broad-based, horizontal kind of stuff to begin with, to start with as a SaaS company. What kind of, deep tech companies which you are evaluating, and you must be getting tons of deal flow, and where do you see across the mistakes or the pain points of building this startup company from India, the deal flow? What are the things which startup founders are doing mistakes building deep tech companies in India?
So, like I won't say mistakes, because if I knew what I was doing, I should have had like a couple of unicorns like you, Sanjay. So clearly, there's a lot of learning to be done. But I think, okay, outside of this thing about focusing first on India, which I think is a massive mistake, as we just went through earlier on. Separate from that would be that I think we are not being ambitious enough or out of the box. And ambitious does not mean going for a broad-based CRM solution that will solve all. Like, I don't mean ambition that way. I mean ambition in the sense of saying that, look, I have an idea that's not been tried out before, and I'm going to give it a shot. But I do believe in that angle. So I don't see enough of that. It's always, companies that look so similar to things I've seen already in the US 2-3 years ago, right? So we don't see enough of those new ideas where I'm seeing for the first time that are coming out of some startup in Bangalore. So I don't see enough of that. I do see a few, and we get like really excited when we see those. But in general, I think that there's not enough out of the box thinking that we'd like to see.
So in comparison to startup which is starting to build a SaaS product in US and companies which are starting from India and building SaaS products, where does the economics play across, and what would work across having SaaS companies start from scratch in US or from India?
So I would say that if we were to think about trying to build a SaaS business like we just talked about earlier, then like the only significant cost difference is where the tech is being built, right? That's essentially it, because otherwise all the other stuff, you can do from anywhere. So we tend to back companies where the tech is being built out of India. But so that is a significant difference, and that can be a big difference also, because I would not say, because for example, I've seen tech teams in the US, and we have like a lot of startups where the tech team is also in the US. So, we see both sides. Yeah. But, you might have startups that have, 4 or 5 people building some great tech. And I would like to see more of that happening out of Indian startups, because like the labor is cheap in India. I know it's not as cheap as, I might think sitting here, but still is cheap. Right. So then what we tend to do is that even though we don't need to, we tend to sort of have a team of like 30 people when perhaps it should have been 5, and expecting much more out of the 5. So sometimes, at least in like key product development, and I'm sure you know this, that sometimes 4 or 5 guys can do the work of 40 or 50 people. If they're really good, well coordinated, they know what they're doing, 4 or 5 people can do what 40, 50. So what happens that when the cost is cheap, it actually works against us, because we automatically think, hey, it's so cheap, why don't you just hire another 5 guys to solve this problem? But actually that could actually set you back in terms of the quality of the code and how clean is the design and all those things. So I think I see that being the trade-off. Yes, it's cheaper in India, but sometimes that works against us because we hire too many people when we should be trying to get things done with a small team of rock stars.
Sure. So there's a question coming up with Vishnu saying that, does SRI Capital invest in B2C products for US built from India?
So the answer is no as a thesis, but like I just want to qualify it, right? Because for example, like we wrote the first check into health, if I may say, for example.
Sure.
So that is built in India, of course, but now, as you know, they are going very strong into Southeast Asia and other markets where they're actually becoming a key player there. But we would not start out saying that we want to invest in a B2C to enter the US market, because that is a very dangerous game because of the capital required. It might make sense for a fund that's bigger, but for our small fund, we won't have the capacity to back them. So say if it's an enterprise software, right, they don't need much capital. So even a small fund like us can back the seed round, the next round, and also take part in the following round, which is fine because you don't need that much capital. But B2C, after the first 2 rounds, right, which a small fund has no way to participate or even to try to maintain the stake. So for a small fund to get into B2C, especially in the US where it's really big money, would not make sense. So
we have a follow-up question coming on based on your health comment. Do you think AI health tech diagnostic solution can go B2C, which is a shift from the traditional one kind of stuff? So AI diagnostic.
Yeah. No, I think that's a fantastic space, actually. I think that's a place where I think we can expect to see a lot of innovation that's going to come out. We look at a lot of startups in India. We've not, and we see like a lot of startups here in the US about like the B2C angle. Actually, in the US, given the complexity of the healthcare system and the insurance and the payments and the whole thing is very, very complicated. So anytime you try to sell B2B in healthcare in the US, it's a long, long haul. Very few people succeed and a lot of people try and fail. So actually, I'm seeing a lot more startups now in the US, at least, going B2C for these types of products, where you are doing, well, let's say diagnostics or some sort of other way to keep track of your health, and there's a lot of stuff going B2C because it's so much easier to actually like really break through that healthcare log jam for payments. In India, I don't know the space enough to be able to comment.
Sure. So I think I'm getting a couple of more questions on the sector. So let's jump into SRI investment thesis, and how do you evaluate deals, and what is Sashi's recommendation to startup entrepreneurs when pitching to SRI Capital, right? What are the startups which Sashi likes?
Okay, so I guess our filter is not any different than most VCs, but I'll just say it again anyways. So of course, at the early stage, practically the only thing that matters is the founder. I know that some VCs might say it's a team. I don't even say the team. I just say the founder, whether it's one founder or two founders, three founders. The only thing that matters at this stage. And the same, I'm sure for you, Sanjay, where you're the first check-in, just like we are also the first check-in. At that point, we really don't care whether long-term, whether the business plan makes sense, and all of that will get figured out. As long as it's the right guy that you're backing, they will figure it out. So to us, that is a primary filter, is the founder. That said, if I had to give like a couple more reasons, it's great to see like simplicity in the message. I like really love it if I can understand what they do in the first like 30 seconds. If it takes me like 10, 15 minutes to figure out what they're doing, then I think that's a bad sign. So I think that simplicity of the messaging to me is super critical. Second is the clarity of thought. It'll be nice to, even if they don't know where they're going, it doesn't really matter. But as long as they can explain why they think this is an interesting angle based upon the competitive landscape, so that like the clarity of thought is fantastic. And of course, my like the pet peeve is actually focus. I love it when people can tell me that this is a segment where I will become number one in the next 18 months or 2 years or 3 years, whatever it is. And then here's how I'm going to get there. So I like it if it is such a well-defined segment where they want to own, as opposed to, well, there are only, like say, 5 players here, I'll be the 6th player, I'll be cheaper. Those types of things don't really excite me. It's got to be that. So which is why this thing about finding out-of-the-box ideas is so exciting, because then we know that what is this new area that they're trying to go and be number one in. But like a lot of the times, we actually just get things that are just a slight tweak on what 5 other people are doing. And I think those are not places that we get very excited about.
Sure. So we got a question coming up. Karan is asking across, does VCs invest in SaaS tech solution for traditional industries like jewelry business?
So in terms of like SaaS offerings for jewelry, that kind of stuff.
Yeah.
So I think that goes into what I believe is the opportunity. That is that you want to find a niche like that. So like you want to find a niche where for a guy in the jewelry business, this is an offering that's like really compelling. And it's not compelling for the guy who's doing bakery or who's selling like auto parts. It only makes sense to the guy selling jewelry. If that's the kind of solution it is, I think that will do well, right? So I think, so you have to look at it like this. One is it a niche market? If the answer is yes, then of course you have to also ask the second question, which is the market big enough to make it worthwhile? If both those answers are true, I think that's a play for SaaS. Yeah.
Sure. Does SRI Capital invest in single founder, or is it a red flag?
No, it's a bright green flag. I like single founders. I mean, I'm like a bit biased because I was a single founder myself, so I'm sort of biased that way. But actually, if you look at some of the studies that have come out, the probability of success is actually higher for single founders than for multiple founders. Though, like the common wisdom among the VCs is, well, you can't back one guy. We need to see a team of 3 people, 4 people, and we need to have like all these complementary skills and all. That's a standard wisdom, but it's not really supported by the data. And I think a single founder is actually like a good thing to have for like a bunch of reasons that I won't go into. But basically, a lot of startups fail also because of all the friction within the founders. You don't have the problem with a single founder. And also you have failure because sometimes you're not able to let go of certain founders to bring in the right talent because they are part of the founding team. And sometimes being able to hire the best that you can hire is a plus. But of course, you also have advantages to having like a set of founders in the very, very early days. They can each like really support each other to get somewhere. But no, the short answer is that we love single founders. We've backed a lot of single founders.
So that's a very contrarian view what Sashi has brought up. In fact, I believe into team. I think we should have a good debate session on this in terms of churning out ideas in terms of single founder or a team. We have got more questions coming your way, Sashi. I think I'll have to not ask my questions. How do you as an SRI Capital help your portfolio companies tackle longer sales cycles, implementation cycles, revenue dependency for enterprise SaaS? Do you work with portfolio companies?
Yeah, so since like my own background is as an entrepreneur, so as a VC, we tend to get like really involved with our startups, like the enterprise tech side, especially. We can't add too much value on the B2C front because we're not experts in that space. But when it comes to enterprise software, B2B sales, we're quite comfortable. We have the network in the US. In fact, I live in the US, as does my partner, Doc Pagi. We both live in Philly. We've got like a whole bunch of these venture partners who are like highly talented, seasoned executives who've joined the team as our advisors. So we actually can do a lot for these companies when we make an investment. We can open up the doors to get them the first few customer meetings. We help in the sales recruitment of the right people in the US. If you need salespeople, we help in the fundraising for the next round. So all of these things we can do because we are more of like operating people.
It becomes your unpaid salesman.
Yeah, it sort of is. But we try to make sure that within 30 days of us making investment, we'd like to make sure that they have like 10 customer meetings somewhere through our network. That's our goal.
No, that's a huge offer which you are giving to, and a great service to your portfolio companies. We got one more question coming from Anil Kamath. What do you expect to see from a company wishing to raise seed stage capital? How would you assess founders? Who say they want to wait for seed capital to take their idea forward, then committing their own capital?
So here's my view on it. That some people may not have the financial security to be able to commit their own capital. Maybe they don't come from that background where they have their own money or family money to commit. So so I don't hold that against them. Where I do have a problem is if someone is not even willing to like quit their job until they get money. To me, it's like if you want to do this, you got to first take some risk and show the passion, and then only you can have the right to ask for other people's money. But in terms of them putting their own money, I don't have a problem because not everyone has a capacity to do so. So I don't consider that to be an issue.
Sure. So one more question. What's your take on VR, AR, e-commerce based tech platform?
So, we made our first investment in VR 5 years ago in a company called Imaginate. I think it's been about 4 years. This space, unfortunately, has been very slow to take off. I think we've had high hopes for VR about 5 years ago. We thought it was going to change the world. And not much has happened. But this is an example of where the COVID situation and the remote economy and e-learning and all of that stuff is now giving a whole new life to VR and AR. And I think we should see much more activity now going forward. In terms of e-commerce itself, I think the first few use cases to be addressed will be things where there's real pain. So for example, the remote tech support type of area, things that that we just need to get done, but we can't do because we don't want to travel unnecessarily. So those real pain points will get addressed first, and then the nice to have will get addressed next. And I think the e-commerce VR thing I would say is a nice to have that'll come in phase 2, but the phase 1 will be there's a whole bunch of stuff that needs to get solved now that can actually be done through VR, which we could not do before. Even stuff like an immersive learning. I mean, I think that's a phenomenal opportunity.
Sure. So we have got one more question on a niche market. We are building IoT solutions for petrol stations. How do you see future of petrol stations? Do you have a view on this?
So I think that's a great opportunity, because again, like it does check some of my boxes of being focused on a niche. It is a big market. So it really depends upon what is the IoT solution and what is the precise pain point being solved. But I would say, well, assuming that they're solving like real pain point, that's a very interesting place to focus.
Sure. So, with your experience, if you can highlight, what are the big no-nos or don'ts an entrepreneur should be doing while pitching to SRI Capital, saying that these are the things which, is a straight no from SRI Capital. Any sector bias or anything where you see saying that, okay, I would not invest in XYZ companies for sure.
Yeah, so I think at a very high level, sector bias, I would say, is that if it's enterprise SaaS, it has to target the US market because that's where we are based. That's where we can add the most value. But with a few caveats, that is that I think the Indian market is going to pick up now after COVID. So I would say if it's solving for India and the US, that is fine. But earlier, our entire view was that like show me some early traction in the US for us to know that will work in the US, and then we'll get it. So that was one bias. The second bias that we had, and we still have to some extent, is on the B2C side. We did a few checks. We wrote the first check into Fab Hotels, Healthify Me, Yup TV, like a bunch of stuff. And I think that like, some of this is going to work out fantastic for us. So we're very excited. But we do see that we don't have any special expertise to bring to the table. Enterprise SaaS, we know what we're doing. We can help these companies a lot. B2C side, we're not clear what is our strength and value add. So we don't do B2C unless there's something really unique which we can help with. Otherwise, in general, B2C in the US we don't do, of course, because it's like huge capital required. But even in India, it's also huge capital required. So it's the same problem in India as well. So not too much B2C, but we'll do a few.
You are a company founder which is not having focus to US. Don't pitch to SRI. If you are into B2C, that's not the focus right now. Anything else which you believe that filters out SRI and you would not invest into?
I think almost every segment of enterprise software and deep tech we would do. In fact, in that area, we're getting like really bolder and bolder. So, for example, I'll just give you an example of things that we would have said absolutely no way to now we're saying that, hey, why not? Why don't we do it? So is in, the hardware space, right? Everybody is scared of hardware. So we did our first hardware investment in a company called DreamView, which is a world's first startup to have a 360-degree camera with depth. Very unique IP. Nothing like that has ever come out of India. And of course, it's actually the first time in the world that they're doing this, right? So of course, we went in with a lot of fear because we didn't know hardware. But we've worked with them and then we realized that, there are opportunities like DreamView, which can change the world. But because it's hardware, no one wants to touch it, right? But now we're seeing as we have more success, of course, there's like a lot of VC interest for DreamView. So we would actually we are now open to looking at interesting hardware ideas. So basically enterprise tech or tech across any segments.
Sure. So Sashi, what would be, if you had to share two NT portfolio companies, the deals which you missed, which came to your table for evaluation, you engaged, but you then didn't invest into it. Share some insight. What type of deals did you miss? Any two deals which became big after you missed out?
Okay, so I've got like a lot of good ones that I missed, but I'll just pick one B2C and one B2B so that just focus on.
Every one of us has got tons of the deals which we have missed.
So actually, one of my things that I missed, which I didn't know till later that I'd missed, was Swiggy.
Oh.
So when I met Nandan at some party, then he was telling me, "Hey, you're the first guy that I sent the Swiggy email to because I'm from Hyderabad and the two founders are both Telugu founders. So, but actually, I did. So I replied to him because I went back and checked my email trail to see if that's the case. And yes, there was an email like from Nandan back in the day, and then I had like replied to him that, hey, I'm so sorry, we just invested in like another food delivery company just 2 months ago. It's a company called Hello Curry that was like started by someone whom I've known for many years.
Sure.
And so we can't get into the same space, so we cannot invest. So I think that was one. So I didn't have any real interaction, but that's one that I thought was really amusing, that I was the first investor that they reached out to because of like the local connect, but I just made another investment in the same space. So that's one.
Sure.
A second company, which actually, Sanjay, I should ask you this. Have you heard of a company called High Radius?
No, I'm not.
See, that is so weird, because High Radius is one of the unicorns out of India that no one's heard of as being from India.
I've not even heard of it.
Exactly. It's amazing because the startup is got a big center in Hyderabad. The founder and CEO, like his name's also Sashi, just like me. He's from Hyderabad. Like he moved to Houston, and that's where he's got a sales office, and that's where he now lives. But he was living in Hyderabad for years earlier than that. So he's actually valued at well over $1 billion based on the last fundraise that he did last year.
Wow.
Unicorn. And no one's heard of it. But, that's the thing, though. There's a lot of interesting companies that are happening where the founders are in the US, that we don't think of them as being Indian startups, but by all the definitions that you would apply to, say, like a Druva or to Postman, they would actually also be considered like an Indian success story. So that's a company where I had a chance to get in early. It was 100% owned by the founder, didn't need to raise any money, built a phenomenal business, completely bootstrapped.
Oh, okay.
Go to VC money. And I had a chance to invest, and which like 3 years later would have been more than a 30x.
Yeah, you've got enough stories to share like that, but always good to reflect upon, what work we have been doing across.
Right.
What are your views on valuations and deal making in India while you're investing across? Any specific advice on valuations for early stage startup founders in India?
So I would say that pre-COVID, I felt that B2C valuations were too high because people assume that the size of the consumer spend was going to be this and this based on all the things that were happening. So I found B2C valuations too high, and I thought B2B valuations were too low. They should have been priced better. But post-COVID, I think we'll see a change in that equation. I think B2C, we're going to see significant depression in the valuations because the consumer demand is just not there, in my view. And I think that B2B valuation should go up because finally there's an opportunity for enterprise SaaS to really take off globally. So I think they should go up.
Sure. And, what should startup founder be doing across, any advice on investor relationship? Because there has been saying that Indian founders are not great at investor relations. What's your experience? Any advice on that?
So I don't have any particular views on that, Sanjay. In fact, I've always been really happy with my relationship with the entrepreneurs, very professional. So I would say that I've been very, very happy with how entrepreneurs deal with investors, at least from what I've seen.
Sure. How would you place SRI Capital, amongst other VCs? What unique value proposition besides capital as a VC fund you would position? If you had to pitch as a reverse pitch to investors, how would you pitch to founders as a reverse pitch? How would you pitch SRI Capital?
So I would say that if you're doing enterprise tech, I'm a VC who has built 4 companies, including 2 that have had really good exits. So I'm like an entrepreneur myself. So I think that's a big plus that we bring to the table is operating experience. Second is we believe that the US market will remain by far the largest market for enterprise tech now and in the future. And both me and like my partner Doc are both based in the US. We have a phenomenal team of venture partners who actually help these companies. So all of that. And then finally, I would say that we've got the network to help find customers, find salespeople, find the next round of funding. These are things that we can add because we're right here in the market. Now,
Sure.
if we're a startup that's focused on India, B2C, I would say we don't have anything to offer you. I mean, we are like really good people, and hopefully we have like some network in India as well. But clearly, we can't make any claim as being the best. But when it comes to enterprise SaaS selling to the US, I can't imagine more than 2-3 funds that can do what we do.
Gotcha. It's a great USP which you have created. If you had to pick up three sectors, Sashi, which you are seeing successful in future, which were the three sectors you will bet on?
So I would say the one that is fairly sorry, I forgot to put on my phone. So one I would say is like fairly obvious, which is like the remote economy, things that have to do with us working from home. So that would be one big sector that has a lot of subsectors that we're very excited about. The second I would say is a deep medicine, in the sense of that right now we've all become sort of like armchair biologists, right? We all know about the virus, we know about the genome, we know about all these other things. I think people are now starting to realize that there's a whole bunch of stuff that's out there in terms of science that can change the way that we live. We can live longer, less disease, all those things. So I would say deep medicine is an area that we're superbly interested in, by which I mean applications of AI to the medical field. We're very excited about that. So I would say one is the remote economy, second is deep medicine. And the third, I'm going to go out here on a limb saying that like smart hardware, meaning innovative hardware that gets wrapped with some AI to do interesting things. So this could be smart sensors, it could be smart diagnostics, could be various things with some hardware wrapped around with AI. I think could be a phenomenal opportunity.
Fantastic. So on the closing note side, if I had to ask you short, and this is all my guests have to answer, it's a forced one. Your views on 100x.vc as a model. What do you see we writing the first check investor for Indian startups?
Sanjay, I did like a post on this on like my LinkedIn, saying that there's nothing more important to the future of a startup than that first check and the first investor.
Sure.
Of course, it's like the founder and their company, no doubt. It is absolutely their company. They will drive the company to where it needs to go. But that first investor, I think, can have a surprisingly outsized impact on what happens to the company. And of course, you could be a bad investor and like really hurt the company as well. But I would say that if you're like the right investor and you write that first check, you can change the entire trajectory of the company along with the founder. So I would say the role that you play as being an active first check writer, early stage investor, and of course you've built like such a big brand and a big name doing all of these investments, being so key to that ecosystem, that I think like we need you to keep playing that role, because that is where I think you will find these startups getting that first bit of help, which is then going to be key to making them get to the next level. So
Sashi, can I request another couple of minutes? We have extended your time, but one more question has come up. Can you take that up?
Sure.
So it's a larger one. Would SRI be interested in evaluating a company, B2B Services, which is now moving into B2B SaaS product for Indian market with respect to HR tech, capturing a large market in 12 to 18 months. HR tech, SaaS startups, what's your view?
So let me address like the first part of the comment, I think, which is really important, because if you've been doing services and you're trying to like make the transition to a platform or a product offering, that's really, really tough. I've seen very few companies make the transition. I'm sure it can be done, but I think you might have to make some sacrifices, such as like being able to carve out that team separately, get it with like separate cap table, separate incentives, ESOPs, that you can like start to recruit the right people to that entity. But making the transition from a services to a tech platform is super hard. and it's got to be understood that way, and then you've got to take the right structural steps to have a shot of success. That said, if you have a SaaS platform for HR, it's good, but HR again is too broad, right? It's got to be something very specific. In fact, one of our most successful investments is in the HR space called Phenom People, that has been a big success story. Again, two brothers from Hyderabad that moved to the US, set up there, selling to the US market. Again, they focused on one specific aspect of it, which is just the recruitment, doing it using some of the social tools that are out there today in the world. Right, so the HR platform is too broad, so I have to know what is the exact focused angle that they're going after in HR. Well, that's space.
Last question, which has come up, is SaaS categories that are likely to witness highest growth post-COVID scenario in US, and are the same categories going to perform in India? In enterprise SaaS categories, what kind of categories will grow post-COVID?
So I think there's a lot of interest, as you know, in the collaboration space. So the first thing, of course, people think of Zoom and Slack and so on and so forth, but those people are trying to solve things at like very broad level. So that if you go back to the story of being niche, what can you do in the collaboration space that is highly focused and solve a specific problem? So I think you'll see a lot of opportunities coming out of that, and that should work in India as well as the US. Same for learning, right? There's at a high level e-learning. People are using Zoom for e-learning. I mean, okay, that'll work for the next few weeks, but at some level, people are going to want to get much more specialized into what is it that you offer that is ideal for kids in K-12, ideal for kids in higher education, ideal for kids in training. So there's a whole bunch of stuff that's going to happen. So so all of these are opportunities that are going to be spawned by COVID that should work in both places.
Super. So any closing thoughts which you want to impart across, Sashi?
No, Sanjay, I think this has been great, and I do appreciate you having me, and I do appreciate the work you're doing, like the startup community. I think it's fantastic. You are really moving the needle with your activities. So thank you.
Thank you so much, Sashi, for coming at 100x Live. It was a pleasure listening to you and your nuggets, and it was quite learning for me. Thank you so much for coming on the show.
Thank you. Take care, Sanjay.
Thank you. Bye-bye.